Live from Music City, Nashville, Tennessee. This is your motivational, sensational, inspirational, educational, aspirational, international, keenly awaited, daily created, highly anticipated edition of the afternoon swing training floor. Your humble host, Jeremy Alexander Newsom, with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. What is going on, folks from around the world? Hope everyone is doing tremendous. I got a quandary I'm going to try to solve really quick. Contact support, data issue, price is incorrect. Give me 1 second. All right. The SPY candle on January 18th and today, January 25th, have lower shadows showing they filled the gap, but on an intraday look, there are no wicks. Any help? All right, let's see if I can send that. See if I ever hear anything back or if that gets resolved. But it's annoying me because there is a little bit of a gap right there. I'd actually like it if this candle did look like this. But as I talked about just the other day, this is a very good pattern, really pretty pennant. And it does appear that we kind of gapped out of it today, but that lower shadow is not there. So I'm gonna see if I can submit that ticket. Right now it doesn't look like it's submitting, but maybe it just takes it. Falco says it's on toss too. Yes, and so I don't know if that's gonna be an issue that, because you got it, I mean, it's really there on the 18th. Toss, it doesn't look like it's quite as big on TOS, but it's definitely there, and it is kind of strange because on a 5-minute chart, unless I'm looking at something different, it just does not appear that there was ever a shadow that kind of came down into that price. So what I'm trying to determine is how I want to trade that based on this gap. And we really could have, and I'll probably send out an email, hopefully tomorrow at some point, kind of like a weekly options newsletter play, just like a second one, because the Qs obviously did not work, and those got stopped out today, unfortunately. And obviously, this whole thing is just kind of bouncing and popping and breaking out. So it's like this is not sending for some reason. Weird. Can I change the ticker with that thing still being there? I cannot. Okay. All right. Well, looks like it went through. All right, well, anyway, so I'm trying to figure out exactly how to play this, because if I go to an hourly chart, so an hourly chart on the SPY, you can see, again, a pretty nice clear gap, no lower shadow. Let me let Trading View load again. So here's the hourly chart on the SPY, and again, you can see that nice clear gap. So I'm thinking about setting up a trade where it pulls back and fills the gap, and also have one where if it just continues higher, to get into that, because this is a really pretty gap. The Qs, unfortunately, I mean, I had to trade it. I wouldn't have been able to sleep at night, and that's the perfect evening star at a really good price, at a spot where if it was going to roll over, it would have, and it really didn't. So that's $500 right down the tubes on the Qs. But we did try it, so I mean, we didn't have any fear. A lot of people took the trade. I liked it. You had the bullish candle yesterday, and again, you just had a nice little gap up today. The interesting thing is a lot of the stocks I'm looking at do have a pretty interesting, pretty big gap. And so I'm trying to figure out if we're going to do this, like fill this gap really, really hard on Monday, or lower shadow and kind of bounce out of there. It's a really precarious spot. But we're going to go through the broader markets. I do have a lot of trades that we can set up today, and some bullish. We'll just kind of look and see how they play out, what ends up happening, and take it from there. So anyway, the Qs did get stopped out, and however, we are in CVS, and so we have one bullish weekly options newsletter trade is up a little bit, and you had the bearish Qs trade that did not trigger. So we'll just kind of see what happens most specifically on CVS and some of these other plays. Therefore, here's the IWM. This is the Russell 2000. And the IWM is up 1.29%. Again, a pretty decent gap. I truly wish I knew if that gap fills. I have a pesky feeling that Monday, I mean, we could just open, gap up a little bit, and just do one of these numbers, just fill this gap and have a huge bearish candle. It wouldn't surprise me in the slightest. And if that does happen, all I'm saying is I'm probably going to get stopped out on some swing trades, and I'll be playing some day trades bearish if that starts happening. Because at this point, I have no reason to suspect anything other than looks like we're just going to continue this slow grind higher. They'll be retested the moving averages. Right, I talked about it on Wednesday. I was like, man, this candle looks real suspect for the bears. Because remember, I actually liked SPY bullish based on the hourly chart. I mean, it was a really good retest. Just came right into the 50. Man, couldn't have gotten in at a worse time bearish. I mean, just traded right down to that support and just bloop. Just a beautiful little bounce, small little move. I was like, shoot. So that was the conundrum that we were in. And it could have done both, right? Could have been in calls and puts on the SPY, and SPY calls and Q puts, and you feel like one's going to work. Falco says, like right when all the bears switch to bulls. Yeah, that's the other challenge is at this particular point, on a lot of these stocks, if we do start going bullish, I mean, we have had quite the substantial move. If you go to a weekly chart, the weekly chart has like this, as John's saying, hangman type of candle, where it's a hammer candle, but it's kind of at a resistance. In fact, this is an inside weak candle that is also white. So could next week get like a small bearish candle or something, and then we break higher or we break lower. I mean, it's just January has been strange. I'm hoping that by next week we'll get a little bit more direction and some general things. But I mean, as far as some traders going bullish here on the SPY, if you did, I get it. I mean, it's a nice little gap. I will plan for this gap to potentially and actually fill a little bit more, and probably set up a weekly options newsletter trade tomorrow, something like this, just kind of expecting this trade to come back down and retest that support and then potentially bounce off of that. Here's the FAS, which is the financial ETF, and that bad boy is just slowly cranking it up. And then XLE, energy ETF, had a little bit of a move today as well. And then the Dow Jones ETF, the DIA, also made a little bit of a new high. And again, perfect doji today on the Dow. Perfect doji. So if you felt like today was a weird day for day trading, which it was, that's kind of why. And we are still, I mean, we're just slowly creeping up. Slow bullish moves for day trading sometimes can be the hardest moves to trade because there's just a lot of whipsaws. You have tons of people selling at the highs and a lot of people buying the dips and vice versa. So the Dow making new highs on the week, just slowly creeping up. Trying to find some things that look a little different than the broader markets. That's overall somewhat the goal for any trades that we're going to take via swing trades. So there's going to be a lot for us to look at today. Brad was in the room yesterday. Let's go ahead and dive in to some of those. Where is that? Move this over here. Okay. Move this up. By the way, I have 100 push-ups left for the day. My arms are sore right now. Man, it's been taking all day to get through these. Well, I say all day. I mean, I only did them for like 15 minutes. It's been a slammed day. Trying to pull this up. Where'd that thing go? Move this over here. All right. Just waiting for this to load. All right. So swing trades current month, again, the Qs did get stopped out today, which was a little on the lame side. Kind of made me a sad panda because it was such a good evening star reversal, but I'm like, man, I gotta try it. It's just too good not to try. Okay. So now that that's slowly loading, there we go, finally, got it. What we want to look at is we're going to go through these and really just talk about which ones need to stay, which ones need to gap, and which ones we can add that are new based on just kind of some general overarching trade setups. So we blue apron, so here's ticker symbol APRN. And I must say, I actually do like the move that happened today. So this is the move on blue apron. Really not too bad at all. Not too shabby. A little bit of volume, kind of an upper shadow, kind of a lower shadow, but you're bouncing off the 10. I like it. We did not close above the high by end of day Monday. So end of day Monday is next week. So we haven't closed above that high yet, but I do like the candle. I do like the volume. So if there's any real chance of this thing slowly working, this is pretty much the pattern that we would want to see on blue apron. We looked at CVS, really not that much happening there. I don't know if there's anyone else in this trade other than me, but here is Turtle Beach, and this is the absolute zero put play. I'm pretty sure I have that. No, that's not the weekly option. This is. Okay, give me a second. Update this. I thought I put that in there, but I guess I didn't. Absolute zero, $15 puts for February. And let me pull this up. HUYA, February 15, $1.60 limit. So down on those right now, but I mean, you gotta like that kind of bearish candle that looks, you know, somewhat bearish. So I'm gonna go throw that in here on HUYA. So those are the three that we're in right now. So again, most likely this is gonna get carried over into February. So I don't think I'm gonna lose on this particular trade this month. CVS, as I just pulled it up, we'll find out within a day or two. I mean, I do like all the gaps that's been occurring. We're trying to double bottom, good bullish gap and go, bearish candle, another bullish gap and go, dividends came out, so gap down, another gap up today, right? Here's the weekly chart, long-term moving averages, you know, we're below them. If you adjust for dividends on a monthly time frame, you get kind of a cool looking chart. So on the 100 simple on a monthly, not a bad spot for it to potentially bounce, just kind of playing that double bottom. So it's one of those we will see situations. But anyway, what I want to do is go through the other trades, which is MPO. And MPO, I'm probably going to cancel this one because it did pull back. It just doesn't look like it's going to pull back, at least not yet, into where we want to go. I really do like the setup. It's a beautiful trade, very nice gap, but I think if it triggers, it's going to be another week or two, and by that time we might be able to set up something else. So MPO, I'm just going to take that off the list. I'll glance at it Wednesday. Just a reminder, open house week starts next week. Derek Washington says, have they reported earnings yet? Which one is that, my friend? I apologize. Is that CVS? If so, yes, CVS has reported earnings, I believe. MPO, this was a share offering gap. Turtle Beach. Has Turtle Beach reported earnings? Great question. Let me find out. HUYA. Look at the daily chart. I'm over here on TOS on the thing. According to this, they report earnings on 3/6 after market. So I think we have a little bit of time left on Turtle Beach for earnings. Last earnings were November, this gap down right here. So again, these are just put options that I have. I have no stop on them. I'm more or less just sitting back, seeing if they're going to happen. Mr. Washington says, I'm asking because there's been an uptick in streamers after its holiday sales. Yes, a lot of people are starting to hop on. And Brad and a few other traders had some put sales down here at 10 that expired worthless. So what is good about this is the quick run up that it had, at least it is slowly rolling over, and it wasn't like a dramatic drop. So that does show some strength and strong run up, and again, more kind of on the slower side. So yeah, we'll see. Like I said, most likely on that trade, it doesn't actually end up doing anything gratuitously wonderful, and I just simply probably exit for a super small gain or a loss. That's most likely what's going to happen on that one. Great question. DELL, D-E-L-L. And this is the daily chart. So we did have a great setup. I loved it. I think I was just one day too late. I can't remember why I didn't set it up. That was a Monday to Friday. I don't remember why I didn't set it up on that day. It should have just been an entry at 43.85, the stop down there. I guess I got too cute, or I forgot, or it was a holiday or something. Not entirely sure. So this was a good gap on DELL. And once that gap occurred, we set up the limit buy, but that should have been just a stop limit, just purely to get in there, because this is a morning star from the Elysian Fields of Profit. Look at that. Boom, boom, boom. Morning star, gorgeous one white soldier. My boy Mark is in some shares though. Mark says, I'm in shares at 43.52 and loving it. Ooh, nice. Yes, gotta like that move. So this particular trade setup for us, I didn't get filled, but again, other traders can do whatever they want. I just want to kind of pull up a chart and maybe help them either find something they didn't find before, see something they didn't see before, or just motivate them in some other general direction. So on DELL, I'm going to cancel that particular setup that we have here and cancel this one, cancel this one. Next on the list is Delta. And Delta was kind of interesting and semi-unique today because all of the airlines were up. American, Southwest, they're all up. We did not get triggered into Delta today. Volume is good. We do have a high wave candle, and it kind of makes me like the trade even more. So I'm going to keep Delta alive, open, and ready to go. Then we have Travel Centers of America, ticker symbol TA. And it looks like I was a little chicken on this one as well. Perfect gap. Again, with a gap like that, should either be in above the high of that bearish candle or have gotten in on the pullback on January 22nd. Was a really very pretty gap on ticker symbol TA. So I just missed that one, and I will come in. We will cancel it. So at this particular point in time, the only other trades open, this is a new swing trade that is alive and active, and I think everyone here will really like this chart. QTT, look at that pattern. Looking real toasty. So 871 by 701. This is going a little different than the broader market, right? Most of December and January, this thing has kind of been just slowly creeping up with the exception of a one big pullback. And on the hourly chart, this is kind of what that pattern looks like. So I do like it. I don't know if it's going to trigger. Please put that on your watch list because I just love that pattern. And just doing its thing. So QTT, that is it. Set up, ready to go. Next on the list is Team, T-E-A-M. And the reason I'm pulling this one up, I had a trader that did bracket trade this because we were looking at this trade when this candle came in. So a huge black candle immediately had just this massive sell-off, huge volume. And what I was talking about on that day is I was thinking, hey, let's let this pause, let it rest. Let's see what the very next candle does, and then bracket trade it. So that was on, the candle came in on January 22nd. Once that January 22nd candle came in, this was kind of the setup. And give me 1 second. So it looked like this at the time, right there. And based on kind of this pattern, right, so you had like this flag pattern, you had this upper shadow right here, and you had this lower shadow right here. So the pattern was, okay, well, if we break down, get in bearish at 90.18 and set your stop at 93.21 or 93.18, and the trader that I know that's in this one got in at this one at 93.18 with a stop at 90.18, which is, you know, again, totally fine. This one was one that triggered the very next day. Bloop. So there it is, 93.18 triggering, and I'll have to really press each candle. But it got relatively close to getting stopped out on day one. And this is today's candle. Just a nice little set of white candles in a row. Good gap on TEAN. And Bob also has a 75 June put sale on TEAN. Okay, cool. Last look at BIOC. Is it doing anything great? Nope. No, it's not. Yeah, I mean, again, this is just one of those that if you're playing it, it has been on a straight drop and, you know, reverse splits. It's just one of those really, really speculative positions that obviously we could get lucky on it. And that's always possible, but you know, getting in at 235, nah, I'm just waiting. If you like it and you play things that are like this, that's totally fine. No worries about that at all. It actually does have good volume. So you would be able to do that. And if you were looking to get in above this candle, just hop on in, let it ride on up, set your stop either at 0 or 50 cents or something nice and far away. Give it a little bit of wiggle room, and then rock it out from there. Welcome to Southwest. Ticker symbol LUV. And LUV. I mean, had earnings, it gapped up. Decent gap, and look at all these white candles. I mean, we have now had more white candles in a row on the weekly chart than the S&P, than Southwest and a few other stocks had on the bearish chart. So we're having tons of weekly candles in a row, a lot of buying coming in. Usually something like this, you get something like this, right? All those white candles in a row, boom, 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 boom. Quick drop. Whenever that happens, probably after it makes a new high, and then you'll get some buying to come in. So this particular bearish limit sell, it does not appear that there's going to be any real actual rollover, especially with that earnings gap today. The interesting thing, I'm telling you folks, I'm really cautious about Monday, because this is a new high, and I'm just excited to see if we gap down or something, and I will buy some dips, no question, but that's a new high, barely. And I can just see some newbies buying right there just for that stock to get thrashed, and then we trade lower. I mean, I could just see it. It doesn't mean it's going to happen. I feel weird buying up at these prices after that many white candles in a row on just about anything. So I'm looking for something, you know, if we're going to be swing trading it, to just has had a little bit more, kind of a pullback. So speaking of lumber liquidators, ticker symbol LL has been kind of slowly grinding higher. You do have some white candles in a row, but again, you do have just this upper shadow and this volume. So I'm just going to keep waiting on lumber liquidators. I don't mind missing this one. It's okay. I should have been in on this candle, January 15th. That's where I was really looking at it. And I just didn't pull the trigger, apparently. I wanted to get in on a pullback on that day. I may have hit a target today, depending on my stop. But yeah, lumber liquidators, no trade right now. So I'm just going to move on that one. Here is FedEx. Ticker symbol FDX. And again, this one's just trying to slowly creep higher. You do have some good possibilities out there, and I will write down, I'm just going to throw this out there. If the market is bullish, really bullish on Monday, we're just going to keep on rocking. You know, if we're gapping or we're kind of, we're gapping up or we're kind of flat, I mean, I'll give it like 5 minutes, but I think that you could easily have a good bullish move Monday morning. This high wave bearish candle on FedEx on the daily chart, if we gapped up, let's say Monday we opened here at 178, that'd be a really good gap. 179.66 would be a really good gap. I just like that. So I'm gonna put that on my list for today. Sorry, Monday morning. Here is Stanley Black & Decker, SWK. And we have been keeping our eyes peeled on this one as kind of like, whatever it ends up doing kind of situation. So here's the hourly chart. And it seems that if I just move this over here, it's been doing part one of that setup. So part two would be a possible pullback to right about here. So if you're looking at playing Stanley Black & Decker, which I'm going to pass on this one personally, mostly just because of the stock. It's just, it's just an expensive stock. I haven't played Stanley Black & Decker all that often. Not saying that like that's scary, but I like that gap. I am going to put this on my list for Monday morning. Small little gap up, because that would mean you have a really powerful new white soldier candle today, and a gap up out of there would just be right into that particular gap. It was a bearish gap and go, and there's going to likely be loads of people trapped. So why not have some, plan ready to go? So feel free to keep your eyes on Stanley Black & Decker. For those who requested it and are looking at it, this could also be a potential long-term play. This could also be a dividend play, since dividends are about a month and a half out. So anyway, Stanley Black & Decker, something to watch. Okay, next on the list, we have IQ. Ticker symbol IQ. And this one is an interesting one. So IQ has had 3 white candles in a row. Some of you might remember when I was looking at this one, I was really keeping my eyes on this candle right there. And when this candle came in, it was a limit buy. I canceled the trade setup. This candle would have actually potentially stopped me out on that trade. So that would have, been sad. I would have been trapped like other people. That would have trapped me, would have gotten stopped out, would have shed a little bit of a tear. And then, of course, when you have the next candle that comes in, inside candle, new white soldier, gap fill, 3 white candles in a row, new high. So if you're going to get in on the retest right there, and then catch up the wave. Unfortunately, that did not happen for me. So yeah, a little bit of a cry. Trying to figure out what to do from it, because at this particular location, the weekly chart, again, like most stocks, you got just tons of buying. And I'm looking at this, trying to think to myself, where to get in from here. Ashley picked up some shares of IQ at 15. It wasn't a lot, but she had a limit buy. She had a limit buy, I think, since like July. And she just sat back and just let it do its thing. So good for her. Nice bounce off of that support. Just sitting back, letting it do its thing, and being calm, being patient. So the daily chart on IQ is, again, good little volume. Here's your long-term moving averages. I do think we could go a little bit higher. And the biggest challenge that I have is now I got that stupid Alibaba IPO in my head. And the Alibaba IPO does do exactly this, and then it rotates lower, and then it bounces higher. I think we could get a little bit of a move. My thought is, if you want to play IQ longer term, make sure you love the fundamentals. Make sure you know what it is. Be a big fan of the company. And if it goes a little bit higher, make sure you have some protection, collar or something, or just lock in the profit and see if you can end up buying a dip just in case the pattern plays out, because the pattern has played out so far pretty well, all things considered. So that's IQ. I love the volume, and what I'm getting at is, yeah, this is a good buy zone, and I am kind of sad that I missed it on January 8th and January 9th. Those are the 2 days that I whiffed, I guess. Whiff and a miss. IMMU. So this is one that is slowly working on filling the gap. This is one that Jane, Airplane Jane, the interviewee on Wednesday, was talking about the gap fill. And she was kind enough to text me about this one again today. So you got that black candle, you got the pennant pattern, it gapped down, right? If we come over to Bollinger's, I do love it when a stock gaps down and it closes with a white candle outside of the band. Even though it did not happen here, it almost did. This one did, right there. So a gap down, white candle closing outside of the band is not a massively rare ordeal, but relatively rare. And I'm trying to think if there's any bearish examples. So here's a bearish example where it gapped up and closed and then just never went higher. So normally when that happens, you just simply want to make a new high or a new low. Looking for other examples. Again, it doesn't have to be on this stock precisely, but it's a relatively rare event. So when that did happen on IMMU recently, it did fill the gap, and it's trying to do that again. So these two black lines are kind of like the entries if you're going to play IMMU. You can also set them up again for a second go round, but there's your beautiful high wave candle right here. It's going to really kind of guide a lot of traders to where to go on IMMU. If you pull back to that particular spot, feel free to watch it and rock it out from there. Okay. Next on the list, this is the newest put sale. This is Etsy. And 37 March put sale for 65 cents. Granted, it did not really have a bearish day, at least not today, but the premium is good. Yes, it's over earnings. It's only about, right at 2 months away. Good premium. It is a hop, skip, and a jump from where it is now. So the stock would have to drop 32%. Certainly plausible, but it would be, a good buy zone off the old previous resistance. And, it'd be also, if you go back to this daily chart, a new low in this really strong bullish gap and go. So it's just kind of my thought process that, yeah, we could get a little bit of a buy down there if it does, in fact, make its way down to 37. Wouldn't mind getting put some shares. So that is Etsy. Simple as that. Just put sale. I'll hold over earnings. When earnings comes out, maybe it gaps down, maybe it doesn't. The other one that a few traders did, actually, I didn't know that may, a lot of people have played pets with me before, with put sales, and PETS, PetMed Express, that's the most recent one that I had. Sold it on this day on the 11th, I believe, or it was either the 11th or the 10th, for 25-cent limit, and then bought back for a 5-cent limit. You know, top of this candle pretty much. So anyway, that one's gone, and Etsy at this particular point in time is the only naked put sale that I have. That's it, just one. I'm trying to wait, well, not trying. I am waiting for Tesla. I guess I'm waiting until earnings. I had too much stuff going, well, not too much stuff going on. I should have done a limit sell or something for Thursday morning. You know, 4 bearish candles in a row, it gapped down, obvious buying location, and, or not obvious buy, but, you know, 4 bearish candles in a row gapping down. It's just makes sense that some coverage is going to come in there. How's the fading been going? I mean, that was a good fade. That was a good fade. That particular day. So with earnings right around the corner, if Tesla gaps down, I will be looking to sell some puts. Many traders already got some puts out there on Tesla. The reason I'm just being chintzy, because I kind of plan on selling a lot. I want to sell like 10 of those bad boys, and the premium just is not as great as it once was. So I'm just seeing if Tesla does gap down on earnings and trades lower into like 260, I think I can get some good implied volatility and try it out. Otherwise, Scott and Robert Falco, you guys will just have to make your money again, and that'll be that. Okay, next on the list, Micron Technology. There's a lot to talk about on this one. Tons to talk about on MU. What a beautiful move. A lot of people are in on MU, and I've been waiting for this move for about a month. This was nice because here's the weekly, and you'll remember I posted this one in Slack. I've been talking about this one for a few weeks. Picked up about 20 shares off at 2903 price point, and it's 200 simple on the weekly. Decent little bounce from there, and have this covered call at 46 for April. If you're wondering, Jeremy, April seems like an eternity away. It is. But my thought is I did also a 33 April long put, which is over earnings. So I got some protection over earnings. And so the covered call already paid for that. Keeping in mind that that's definitely a new pivot. You know, so if Micron gaps below there or breaks below there, it's going to be good to have a protection there anyway. And I sold the February 15th protective put. Sorry, not protective put, but I sold the February 15th put. Still 33 against the 33 long put for 26 cents. So the goal is if this thing keeps trading sideways or whatever, I'll keep selling puts against the long 33 to pay for, or at least, you know, slowly hedge that position. More or less just to find out what MU ends up doing. And I'm kind of hoping that I can get called away at 46 on this one. Dollar cost average is around 41 and some change with, you know, not brokered DCA, but just covered calls, protective puts, and adding some of those positions down a little bit lower. So getting called away at 46 really wouldn't be that astronomically of a bad play. I know April's far away. I know it's over earnings. And again, if I get called away up there, cool. But it's right at the 200. I think actually it probably won't get exercised, and I'll be able to do another one. This is the perfect point in time where I would love for MU to have dividends. That would be great. But it doesn't. So, all right. This stock does have dividends, I think. Activision. Does it? I can't remember. Yeah, maybe yearly. I don't know. Falco had a covered call. I think did you do another one? Was this Friday again? Or is that later? I can't remember. I know you texted me that you did one at open, I think it's February. Same strike, 51.50? 54, what a boss. Calm down. Calm down. All right, so let me save that. 54, all right, great. So again, you can see a really beautiful hammer candle at support with good volume on that gap down in the 11th. That obviously happened after the fact because I did try to short that gap down to no avail. And we've held that price pretty much ever since. Really nice doji. I kind of like that doge. I know the 200 is right in front of our face. I get that. But it doesn't look like that 200 has really been holding back a lot. That is an interesting candle. I kind of like that. Do I need another bullish entry though? Not necessarily. But if anyone's looking at playing Activision, that could at least be something you could consider. So that's the daily chart on Activision. I just like that doji. It's a nice doji. I think the last time we played something like that was over here, and it worked for like one day. So that could theoretically happen again. Welcome to kind of just keep your eyes peeled for that. But anyway, that's what I got on Activision. Take Two Interactive, mostly pulling this up for Bryson. He had a 195 bull put spread expiring today, and it expired worthless. He did text me on Wednesday, a little worried, but I was like, man, that's a big gnarly candle. You have 1 day left or 2 days left. Let's just give it some time. So Take Two Interactive did have a good quick flash lower. Nice pennant pattern building on Take Two Interactive on the 100 simple. And again, this is a weekly chart. All right, next on the list, you got CGC, Canopy Growth, AKA Alternative Harvesting, AKA Joint Ventures. Canopy Growth, gapping up, volume increasing. I forget who mentioned the pennant pattern on this one, but you can see that indeed did occur. Nice gap up. Here's the 5-minute chart on Canopy Growth. And if you're talking retest gaps, I did not play this one. But if anyone is out there has been working on practicing bullish retest gaps, this is sheer money. Pure gold. I want to know where the gold's at. I love this trade because it breaks that low of the day, trapping anyone who got in early, right? Anyone who just kind of bought in, they immediately got trapped. And then you had that morning star reversal right off the 10. Again, I didn't take that trade, but look at the highs of these candles. Highs of these candles, 46.50, 46.50. Call your mama because you're getting a new pair of shoes. So anyway, that's Canopy Growth. Nice retest gap, good play. Has had some, this industry has had some really good strength as it did trade right into the 100 simple on a weekly and bounced. Sorry, it wasn't CGC. ACB? One of those just pulled right into the one, yeah, it's ACB. Pulls right into the 100 and just boink. And that is that. All right, wonderful. So that's what I got. That's that one. And next on the list is Twitter, TWTR. And Twitter, I was looking at this one the other day as kind of like a potential bracket trade. It just traded down. It's still stuck right in between long-term moving averages. And I guess that's really it. I don't really see much on this one, so I think I'm just gonna pass. Next, we got ourselves Johnson & Johnson. So J&J, talking about a potential bearish swing trade. I think we got one, another one, and another one based on this candle. So if I go in here to an hourly chart, this was the analysis I did the other day. And I do like these lower shadows. I think I do kind of want them to break down now. And we'll do something like this. We'll do bearish stop limit. And we're going to do a higher limit than the stop. $126.66 with a limit at 127.11. 127.11. Stop 126.66. And I think the stock can just kind of hang out up here. 129.87, something like that. So kind of what I want that to do then is break down, rotate, and roll over. So I'm going to throw that in the trade journal as a potential bearish trade. Because we do want to have some out there. I mean, again, if the market just absolutely goes poo, and we want to have a piece, and we got Delta as a bearish trade, I got here as a bearish trade, and this will be Johnson & Johnson. 3 totally different industries. 127.11 and the stop loss 129.87. That'll be, you could do share. I think it's a great trade actually. It is based on the gap and go. It is open because it's not triggered yet, and we can throw that in there. And again, it might not trigger, but here's the daily chart. And I mean, that's, so the gap and go that I'm basing off of is this gap and go right here. You see that? And then here's your moving averages. Moving averages are bearish. This is the daily chart. And then here's the weekly chart. So we'll see. All right, that's let me make sure I put that in Slack. Up over to Slack. New official swing trade. All right. Next on the list is MKC. Tons of people were watching for this bad boy to fade yesterday. And I did think it was, and it did. So the thing is, today, it gapped up and just faded down all day, and I missed it. It wasn't even on my radar. Once it gaps, I just missed, I guess. That breakdown would have been right there, 122.73, right below these candles, top above all those moving averages. That would have been a nice little trade. Don't know if anyone else caught that, and if you didn't, it's totally okay. I did not either. But I think that's all I've got on that one. Now, what else can we do on MKC? I mean, could this one end up being a swing trade bullish? I guess that's a good question. Yeah, it could. Let me go back to the Bollinger Bands, because this might be that exact thing we just talked about. And if it is, I might set that up. Oh, yes, Sereno. Look at that. White candle closing outside the band. This could be one of those times where we get to kind of figure out and determine, is that going to work or not? So the way I would try to set that up is if I come over here to an hourly chart, and again, this is a relatively expensive stock. Entry would be right above the highs of these candles, and stop would be below the low. That's a pretty far away stop. That's going to soak up some serious buying power with all the other ones. Let me just see it. I think that could be, I think that can happen. So if I make that 118, it's only $4. Yeah, it's not bad. That's not bad. 118.32. Like I said, Blue Apron's cheap. QTT is cheap. Stop. ATR is a put option. So, you know, that's not very expensive. Bullish stop limit. And we're going to base this one off of the Bollingers. Oh, snap. I'll kind of write it in. I guess I could do both. What time is it? I got to speed this up. I don't think I'm gonna be able to go long today. All right, here's the hourly. And here we go. So MKC, where I gotta put this? New swing trade. New official swing trade. All right, 1/25/2019 MKC, and that's 122.32 by 118.32. Yeah, it's not that expensive. I think it's a great trade based on a fade. I don't have fades in here, I guess, yet. An open because it's not triggered yet. Okay. So that's in MKC. Come back over to here and then pop into TA. So TA, I think we already looked at that one. We did. Okay. Traveler Centers of America. That was the one that I set up and barely missed. SBUX was a mean kitten today to a lot of traders. It was a phenomenal gap that just did not work. One of the other reasons that this is on my list is also we have some traders who did this put sale. And with that particular put sale, I mean, they're just, you can buy that back for like 3-4 cents. Writing that down, recording. So I'm gonna take that off, and that's pretty much it. Here's the 5-minute chart, and obviously we can see, I mean, very gorgeous high wave candle, relatively choppy, relatively all over the place, and that is indeed what it was, just all over the place. Blake tried it twice, it just never really transpired. Good try. That's all I can say. If you want to try this again, I do think it has the ability to continue higher. It's a great gap. It really is. Even though it hasn't made a new high yet, I mean, that is a pretty gap and that is a beautiful candle. So there's a good chance that we're just going to try to take another stab at that. You know, if you're a sour on SBUX, that's fine. If you never want to trade again, I understand, but that is a beautiful gap. And there are a few people out there who trade SBUX relatively frequently. So we'll just kind of see. And I'll throw that one on the list for Monday. SBUX. Okay, next on the list is UTX. And UTX, I also love this setup, and it might have to be an option because this is going to be buying power heavy. Earnings just came out. It's a really nice gap, and you know, here's the hourly chart. I'm thinking about even doing like a March 115. The spread is not horrendous. I'm doing this on my other computer. Let me just look at, okay, the March. So it'd have to be like 440. Wow, by 340. That is an aggressive but fun trade. I mean, what I'll do is I'll do this and stop. and I'll write it in. March 115, 440 by 340 is a possibility. If you want to keep your risk at an R, sorry, $1. If you want to have a little bit more of a comfortable risk, which I kind of suggest, you know, feel free to do that, but definitely keep an eye on that one. I'm going to come back and look at that on Monday. Just kind of see what it does. But that's a beautiful gap. I love that candle and I love that pattern, and just, it's going to be a really tight risk reward ratio. That could also potentially become a weekly options newsletter for next week if everything still looks good. Okay, next on the list, HUYA. And the challenge with this one is you have a really good candle. Another great gap, another phenomenal amount of volume. Look at this thing. Look at this pennant pattern. I mean, that is beautiful. HUYA. So another example of just barely breaking that IPO low and then bouncing. Here's the hourly chart, and hourly chart, you got that high wave candle. I do not think this thing pulls all the way back to that price. That'd be almost too easy. So we're gonna have to keep a close eye on this one. The challenge is, I mean, I'd like to trade this one as well, but I really would start to open up a little too much risk because I haven't moved the stop on this, haven't moved the stop on this, haven't moved the stop on this. That's 3, 4, 5, 6, 7. So even though they haven't triggered yet, if they all did trigger the same day and I got stopped out on them, I'd break some rules and that would kind of stink. Even though I don't think that would happen, I mean, it'd be kind of rare for all those to get stopped out all on the same day, different sectors in different directions. Please keep your eyes on this one. This is definitely going on the list for Monday as well, and certainly put that on your list because that volume, that gap, that is lovely. Walmart, someone was asking, Raj was asking you about a covered call. And yes, I mean, a covered call this morning would have been wonderful. I don't have any personal shares of Walmart, but if I did, I would go March and I would go all-time high. It's over earnings, March 105 or 110. 110 is not going to pay you any money. I would go March 105. You're not getting tons, but that is the nature of Walmart. You would get an additional almost $9 a share plus a dividend, more or less, because you would get 44 cents for a 105 covered call for March. This morning would probably have been the better place to sell it because, again, you had that really pretty gap up today, and you know, it was a white candle gapping up, so that would have been a nice time to sell. At one point, you know, at open, you could have gotten about 80 cents on that covered call at open this morning, and that would have been a great place to get in at 80 cents. But it's either that or just give it a little bit more time and see if it can recover from that bearish gap today, close above, and let do that covered call as it gets closer into earnings. But you are correct. It has had a nice little bullish pop over the last few days. Last but not least, my boy Derek Washington sent me an article about Nokia back in like October. And this is a beautiful gap on Nokia. Here it is on the weekly. Now, even though it didn't gap on a weekly chart, you can see the moving averages are acting as a little bit of support. And here's the monthly. And the monthly, it finally is breaking out of the 100 simple on a monthly. So if we can stay up here, obviously Nokia gaps very frequently, but that's beautiful volume. That's very nice gap, gorgeous location. And I'd have a hard time seeing why it doesn't trade to at least 7.5. I don't know when your option expires, Derek, but I do have some buddies and some friends of mine who are also in Nokia with some shares. So 7.5 would probably be a very reasonable target for Nokia, especially after that gap. Derek says he's in some shares. Beautiful. Nicely done. And since it's super cheap, you probably have more than 100. There's no real money for a covered call, although if you have enough shares, you could get 3 pennies for an $8 covered call for March. So if you got called away at 8, you'd probably make some money. If that even seems remotely appealing to you, something you could consider. Otherwise, I'll just probably sit back and let it ride. Team, the free week starts on Monday. As you all know, it's going to be lit, wild, and crazy up in here. Tons of traders going to be asking great questions. People just like myself and yourselves, coming from all different various backgrounds, asking all kinds of great questions. It's going to be a very wonderful event. Get your keyboards ready. Get your links ready. It's time to approach this as a team. Only twice a year do we do this. And for obvious reasons, since we trade full time and we want to trade actively and be there, this is, you know, I'm not in it for the sales. I'm in it for the for just generally helping people, getting people to move along, getting people to understand how the markets work, how to safely and properly approach it. It's going to be a great session. I'm really fired up. Thank you all for being here. It's an immense pleasure. My boy Gary Peters says, have a great weekend all. Thanks, man. You too, buddy. I hope that email reply with that video worked last night. Team, you're incredible. I'll see you on Monday. Let's blow the doors off of this. It's going to get wild. It's going to be fun. I'll see you then. And until then, remember, love life, live life, and trade it. You rock. Bye.